The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And looking right there, we got the S&P. It is up 10.75 points. We got the Nasdaq up 27. We have the Russell up 8 and the Dow up 27 points. So after pulling back from their highs right there, it looks like they're trying to move on back down. We'll see how much further they can go. We got gold right now is up 3 points on the day. We got silver down 1%. Copper down 1.67. Oil is up 10 ticks. Corn is up 6.5. With soybeans up 6.75. The euro dollar is currently trading at 14 pips with the pound dollar down 47 and the Aussie dollar down 10. Euro yen is currently up at 1.53, so $1.53 up right now on the euro yen. Just a crazy volatile pair lately. It's been great to trade along with the pound yen and the U.S. yen. So pound yen up at $1.05, and we got the U.S. yen is up 99 cents. The U.S. CAD is currently up 6 pips on the day. So we got some decent, nice movement for a Friday. Usually we don't get all this, movement going on Fridays. It'll get really quiet, but we're getting some nice movement, even here in the afternoon. So after the lunch hour down there on Wall Street. And so hopefully you're taking advantage of that, enjoying it. We had a potential news trade come out this morning. No goods trade lined up, so we didn't have one. But we were looking at a potential move on the USD CAD, and had the core CPI. And there was also the German, I don't know how you say it, Bubba. President Weidmann was speaking today. It comes out of the German Bundesbank website. But it's Deutsche Bundesbank Bubba, so basically it's the nickname for it. And that's what that means. But I'm not sure if you say Bubba or Booba or I don't know. I took a semester of German like in junior high, so I don't really remember too much. That's been a few years ago. But let's go ahead and we'll check those charts out just to see, on those announcements what kind of impact, took place. And what we can see over here, let me back this on out. We'll throw on a few things like we like to throw on each and every day. We're looking, and I'll drop it on to 10-minute bars. Got things already set up and ready to go. And now we'll go in and we're going to look at the USD CAD. We'll check that one out first. So right here on USD CAD, we can see that the announcement came out right at, let's see, I want to say it was 8:30. Yep. So right there at 8:30, the announcement came out and we had some oscillation. Basically, it came out, dropped down a little bit, came on back up. What was the announcement? What was the result? The announcement was for the core CPI, and it came in at expectations, 0.2%. Now, there was a couple other medium expectations that were a little bit lower than expectations, but they're not expected to have not medium expectations, medium impact. So there's a few medium impact reports that came out, but we really look for those high impact reports, and then we also look back and see the historical moves, and just based on what was going on, trade was not placed. It was and turned out to be good because there was only 13 ticks down, and what do we get this? Like 10 ticks up right there. So really not much profitability in the trade. Now, if you could have got in at so around a $10 risk, you could have taken off both sides possibly for break even. If you took off the short side, it moved on back up. But overall, the trade wouldn't really been worth your time or worth your while. Going on and looking on over at the euro dollar, and let's pull it on up. We got euro dollar right here. Now, so it came out at 6:30 a.m. Let's back on up and check it out. So right over here, got a 6:30 report, and you can see he came out, he started talking, and I guess maybe here he said something substantial, who knows, but we had a little pop right there, and came down, had another pop, and then started moving back down, and has been moving down pretty much ever since. This morning we called a trade on the euro dollar, and let's see if that one expired. That actually made a profit, so it wasn't just, anything to write home about huge, but it did nevertheless make some decent money, and it pretty much right there on the close of the day. And let me see if I can pull that trade up, and if I can at least give you the details on it, on how that one went, so we can, just analyze it. But we called that on the bull bear binary hour this morning. Tom was like, "Hey, let's check this out. Let's do this trade." And it took a little long to get it. We would have got in more time, but we kept talking about all the new things that came out on the scanner. And so we got in a little bit later than we wanted to, but nevertheless, the trade still worked out for us. And let me check out my order history. And I can go through the trade with you and let you know how it went. We sold 5. Okay, there we go. We sold 5 right at the price of $30.95. So right here at $30.95. We were talking about it back here. We finally decided to get around to actually doing the trade. And like I said, we took a little bit more time than we would like to, but as we were just going through it. But right there. Yeah, that's not the best line for it. Let's use an arrow. Arrow will be a little bit easier for you to see. Actually, right there. There we go. Okay, so we sold right here at $30.95, and it just kept moving on down. And for the expiration, let me see. I can actually. What's sort of cool is Nadex will email you as soon as a trade expires. They'll actually send you an email, and you can even send that to go to your phone or wherever you want it to go, and to be able to basically see how your trades went. And one of the things that can be confusing is they'll say like payout. They'll tell you what the payout amount was. And there's a lot of little tricks, things that you can learn that helps you just understand how this works. But when they do payout, they give you your risk back plus your profit. But let me show you. This is sort of a cool nadex.com/results and .html. If I go on over there, and it does take a minute for the page to load, okay? But they'll actually list about it, maybe, I don't know if it's like 10 minutes or 30 minutes, but what they'll do is they'll actually list every trade on here for about the past week, every contract, and there's a lot of contracts. But we go down here, we go to euro dollar on today, and then we go down to, still going, 11, and try to get down to 12 o'clock. There's a lot of euro dollars. There we go. And see if they got those up yet. There we go. Yeah, we got the 12 PMs. All right, so they expired at 1.30657. And again, we sold that trade. You can see that over here in my order history over in Nadex. We sold that trade at $30.95. So how much did we make on the trade? And how much were we risking on the trade? So 1.3095. And then minus 1.30. Let's see where we get. I want to make sure I get the exact right number because I scrolled my screen when I moved it. 306565. 657. Yeah, there we go. Click back on the screen there. 1.30657. So we made $29 on the trade, and because it has the half pip in there, and they round it all the way off. And so what was our risk on this trade? Well, when we looked at the trade, the ceiling of the trade was 1.3110. Okay, so 1.3110, and again we sold it at 1.3095. The risk is the difference between the two. So we had a very, very low risk on the trade. It looks like it was 15 ticks risk on the trade. And so not too bad, but 1.3110 minus 1.3095 gives you a risk of 15 ticks. Had a profit on the trade at 29 pips. So that trade right there from the one we called this morning actually came out to be a 200% profit on the trade. So it came out really well. And with defined risk. And if the market would have went up against us, we couldn't have lost more than $15. And that's by controlling a mini lot. So it's like controlling 10,000 euros, $13,000 with only $15 risk. And you get, that's massive, massive leverage. So if we go over here and look at this trade, if you would have followed this trade, like what kind of leverage would you have got on the trade? Well, if we know it's worth 10,000 euros, because it's equal to a mini lot, $1 per tick, and then we multiply that times the euro's rate at that time, so 1.3095, that'd be $13,000. And then, let's see, we'll divide that by 15. So it's 873 to 1 leverage. So insanely massive leverage, 873 to 1. Because again, it's like controlling 10,000 euro dollars, and with only a $15 risk and not having a stop loss. So on that trade, we didn't have to take a stop. So it was actually just a really good trade that lined up and great risk reward on the trade. And we didn't get our take profit filled. Okay, so we had to take profit down there, but and it went down to, let's see, we'll look at exactly where the take profit was. Right over here. So it actually started going right into that price point. Okay, right at expiration is actually at 12. I got on 10-minute bars. I have to break it down to 1 minute so we can really see what happened. So let me bring up the 1-minute bars. And so this is pretty sweet because this really did line up. So we're going in, and the market expires like right here. Okay, the spread got down to 1.3062, but you're talking like right at expiration. So like right there, and there's probably like a tick or two of break-even distance. And so literally, I mean, called it pretty much to the tick. Because I asked Tommy, I was like, okay, so by what time? By noon. And then we said, okay, what price are we looking to get out at? And we're looking at, 1.30, 57, 58. I don't remember the exact price he said. And then we added in a few ticks for bid-ask spread to make sure everything was okay. So the actual order we sent was 1.3062. And like I said, it got right down to that. But, I mean, the last minute and just maybe a tick, a break-even distance. So didn't get filled right at 3.062. This is the bid. Okay? So, the ask would have been, if you assume a few ticks, would have been like 1.3065. And so that literally would have been like right where the ask would have been at. So with the 3-tick bid-ask spread, if it's 1 tick, it'd be 1.3063. So literally just 1 to 3 ticks right off calling it perfectly. And then it expired out. We got filled really at the same price. We got filled right there at just within a few ticks of it. With our goal of getting out was 1.3062, and it expired at 1.3065. So, I mean, just a few ticks off, and just right to it. And we were going for that by noon. So the trade went went off without a hitch. That was great. And it's nice because, I put that trade on, and I literally just now, when I got in the air, checked it to see how it went. And a lot of trades I'm doing, I'm sitting there, right there, and I'm monitoring. But if I don't have to worry about a stop loss, okay, then because of where the risk reward is, I don't have to monitor it as closely because I'm not worried about getting stopped out of my trade and having to make another decision whether I'm getting in or getting out. And if I look at it, a little bit deeper, then I can go in and actually see that I can put a limit order in to take my profit. And in this case, my take profit didn't get filled by a tick. It was so close. But didn't get filled by a tick there, and really, I guess you could say a few ticks, because the low is 1.3062, so if you add in a few more ticks on the bid side to get the ask assigned filled, because you're buying it back. And if you don't know what I mean, let me open it. I'll just open a ticket, and I'll show you what I mean by bid-ask spread, because I think this is something people in all markets a lot of times forget about. So we'll talk about that when we get back from this break, is how do you factor in your bid-ask spread to your take profits? Be back soon.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And just going into new stuff, and if you got any questions, like I said, just give me a call right now. I'd be glad to take your call and answer any questions that you have. So right now we got the euro dollar, checking that out, looking where it's moving, and it's just been trending on down. And I wanted to just go into a simple topic of bid and ask spread. And one, you want to be aware how wide the bid-ask spread is relative to other markets. So some markets may have, you may see like a 20-tick wide bid-ask spread. Some ticks 5, some 3, some 1. So you want to be aware of that because the bid-ask spread is the cost that you're going to suffer when you trade. Okay, it's one of your trading costs. But it's why is it there? Why does it exist? And what do you need to know about it when you're actually placing a trade based on a chart? So the reason the bid-ask spread exists is that's where a market maker makes their money, and the market maker is the one who connects the buyers to the sellers. That's all it is. Walmart is a market maker. So they're connecting the buyer to the seller. The buyer of the bread to the seller of the bread. That type of thing. And so, you want the market maker to make money, believe it or not. Now, do you want them to have it, but when you go into here's another example, a car salesman, okay? They're a market maker. They're trying to connect the buyer of the car to the seller of the car, Toyota or whatever other company you want to talk about. And so when you go in and you look at that and how that works, then you go, well, I know these guys are just trying to get a whole lot of money on me, and so I'm going to try to negotiate it. And you're trying to negotiate that price down because you don't mind. The guy needs to make some money. You understand that, but he doesn't need to get rich just off of you, off one car. So sort of the same thing. Look at your bid-ask spread, and if it's too wide, then you decide not to take the trade, or you bid inside the bid-ask spread. Now, you put a buy above the spread, but not too far above. And this really applies when you're trading like call and put options and vertical spreads and iron condors, things like that. You definitely want to be going in and like a lot of times trying to get inside that bid-ask spread because you can negotiate it. And you have to look at the reality that the market maker has to make something on the trade. And I'll give you an example of that negotiation. Let's see if we can pull some up. I'll pull up Thinkorswim. And right here, we'll go into all products. We'll pull up, let's pull up the rut. Whoops, one too many T's. And we'll go in and look at, we'll just say verticals. And we'll pull up, 30 days out, May. And notice, that's what I want you to notice right here. Look at this. 270 by 370, or by 380. So, now it's 260 by 380. But the last fill was at 348. So, which is pretty much right in between there. Okay? So, let's go up and let's pull up. And what I also like to do is add in one more field on here. There's a lot of different things you can do with this platform. But I like to add in the mark. There we go. So the mark right there. And what the mark shows you is the average price between the two. So 320 is the difference between 370 and 270. Okay? A lot of traders go, I'm going to go for the mark. Well, if you go for the mark, then you're sort of cutting out the middleman. All right, you kind of have the mark, and I understand the whole desire to do that. But if you want to get filled, it's not necessarily the best way to do it. So you usually want to give them at least something to have a motivation to fill your order and give to somebody, everybody else. And so you put that trade. Now they either have to fill it or they have to reveal it, and that applies to certain trades. A lot of times, though, when you do like options, when you do like verticals, they don't have to do the fill or reveal rule. Now, if you do a call or put, they have to show it. But if you do if you're doing a multi-legged order, they don't have to reveal it. At least the last time I checked. That rule may have changed, but the last time I checked, they don't have to reveal your vertical order to the market. They can choose whether or not they want to take it. Now, if you put in a call, and I put in a price in between that bid-ask spread, they have to show the market that order. Okay? Now, when you do this, you want to understand that you want to give them a little bit of money. So at least add a nickel or a dime, to the mark. And you may even want to go between the mark and the ask. So you may go, well, if the mark's at 320 and the ask over here is at 370, so 3.7 minus 3.2, okay, it's 50 cents. And so let's get right between that. So divided by 2, divided by 2, it's 0.25. Let's add that to, subtract that from 370 because that's where it was at. So 3.7 minus 0.25, we get 345. Look at where the last ask was, or the last trade was filled at, 348. So if you're trying to, get a discount, you're basically trying to go halfway in between the mark and the ask. And that'll get you a little bit of discount on that ask, and a little bit, halfway between on the bid, get a little discount if you're selling too. So that's something you can think about, and we'll talk about it a little bit more when we get back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, so I'm back to the topic here, and just looking at the same thing, just sort of watching what's happening as the market's moving along, okay? And we have the same thing going on. And let's look at this. I mean, we got now where it's at right now, 3.6 minus 2.8. We got 0.8. We divide that by 2. It's 40 cents. And then let's subtract that from 3.7. Oh, I guess 3.8 is where it was when I was trying to type it there. So we get 340. And again, the market's fluctuating a little bit in between here and there. But notice if the last fill was now at $3.30 on that option that we're looking at. So, and I'm not looking at necessarily buying the option. I'm just trying to teach you about that spread at the moment. But, you know, negotiating inside that. So it's one of those on when you're trading on like vanilla options or verticals or whatever on the CBOE, you know, the different markets that you can trade those on. Those are ones that you can negotiate. And just because of how they're built, how they're made, how many market makers there are, I mean, we go on down the list. But right there, you have that ability to go in and trade them, but negotiate. Don't necessarily pay, you know, sticker price. And the bigger a market gets, the more you can do that because there's more volume. And why is it easier to do when a market gets bigger and bigger and bigger? Well, here's the main reason is because a market maker that's truly trying to be a market maker, okay, is simply trying to connect buyers to sellers. They're not trying to, you know, be the buyer to the seller. They're not trying to be the seller to the buyer. Yeah, they are technically, but they're wanting to take it and they're wanting to get rid of it. They're wanting to have a delta risk of 0, meaning not be directional. They're just trying to make the difference between the two and make that money on it. They're not trying to be the company that buys the bread from, Wonder Bread or Mrs. Baird's or whoever. They're trying to be the company that gets the bread from Wonder Bread or Mrs. Baird's and sells it to you. They don't be stuck with the bread. Okay? So that's not their intent. That's not their business. And so if you understand that, you're like, okay, well, so they're trying to connect the two. That's how that works. And they only make money on the difference. So I understand that if I try to go in and say I want to buy this at $2.70, they can't make anything. If I try to do $2.80, that's still not that much. So if you give them some, but you don't have to give them all, then you're more likely to get your fill. And now, if you want to get filled immediately, okay, without any negotiation, then you can go in and you can choose, like $3.70 or whatever, and you'll get filled right away. But that's one of the things that you can really, really help. That can really, really help you. And hopefully you'll like that, and that will help you in your trading. Now, how can you take it to another level, and what markets can you apply this on? And some markets, it's not going to help you at all on. Okay, if you go in and you try to do forex and you're trying to trade, in between the bid-ask spread, probably not going to be, unless the market oscillates. You're not going to get it. Okay, I don't care if there's a 10-tick bid-ask spread. You're probably going to get it unless it oscillates. They may fill it for you, but if you're really trying to get your fill, probably not going to work. Some futures markets that will work, that have wider bid-ask spreads. They'll come down, pop it, hit it, fill it, wait off. So sometimes that will work on a futures market. Sometimes it won't. And there are advanced ways to do this. There's a program called CQG Spreader. It's not the cheapest thing. It's like $2,000 a month or something. But I did a lot of trades on it where I'd go in, and when I was doing future spread trades, and where I'd buy one month and sell another month, or buy one market and sell another market, and I could go in and set up the DOM to actually do both trades for me simultaneously and work the orders at like insanely lightning fast. And when I did that, then it would actually help me get some really good fills on it. So like a tool like that was really helpful. And they've even added something, this isn't the exact same thing, but they've even added things like pairs traders on here where you could add in 2 different months, and you can add in your ratio, and you can have this work both sides for you. And it's pretty cool. They've built a lot of different things in here. But notice right here it operates with the market price. So it's not using like limit orders and stuff like that. But if you are big into future spreads, and if you want to get, really try to get the best fills you can, you got to check that out, the CQG Spreader tool. It's one that, I've used, I've traded, I don't know, a couple dozen markets on it. And you got to be careful how you set it up. It's one of these interesting stories. I went in there and I was actually working on arbing oil and mini oil, okay? And because, if you look at oil, and let's see here, this is sort of a helpful tool. We'll see if they have it in. But you'll notice, like, it ticks right there in quarters. Oh, wait a minute, not in quarters. I have to just read the screen. So you got oil right there, ticking in, pennies at $10 a tick. And let's see, what symbol do they have on here for mini oil? Do they have the mini oil inside of Thinkorswim? I think they do. I'll figure it out what it is. And but the two ones, they actually tick in different pairs. I think I saw it. There we go. Yeah. Notice it ticks in 0.025. Well, they're the exact same contract. Okay? One of them's 50 barrels, the mini. The other one's 100 barrels. So if you buy this one and you sell that one, then you have the same thing. So let's go, we'll check this out on their spreader. This is sort of a cool thing to do, the QM. So we'll pop in QM, and we'll pop in CL. And we can also put the ratio in there. Oh, do it here. All right, haven't used this that much, obviously. We'll maximize. So what is maximize? Yeah, there we go. So QM. And so see right there. And then what we do is we actually do a ratio of 2. But we don't want to throw, like, that's actually what the ratio would be that you trade. But you can leave it at 1-to-1 to actually see the difference in the price. And notice they're really, really close. So, like, there's a, 5 ticks off. Now, part of that's going to be bid-ask spread, so you got to be aware of that. And if we look at a chart, we pull them up. We can pull up 2 charts, and that'll really display it for you. So it's just sort of a fun little fact. And we'll pull up QM over here. And we got like 88.17 by 88.17.5. You remember they ticked it. Now it's 88.16, 88.17.5. So they're the exact same market. And let's see if we can pull up. We'll pull up the active trader. Pull this thing out so we can make it bigger. And we'll make this a little bit wider so we can actually see the quote. And there we go. So you can see like now it's 88.14, 88.17.5, 88.15, 88.17.5. So they get off. So even though they're the exact same thing, just one of them is half the size of the other. So they have to come back together over and over and over again. And normally I would not share an arb trade. But, you know, on this one I was like, oh, man, they get off. Like, at times, I mean, it'll be like 4, 5, 6 ticks. Okay, well, it doesn't sound like a lot, but that's like $50. So $50 doesn't sound like a whole lot, but $50 over and over again, you know, without, you know, and I'm not going to say risk-free because you got to get both sides filled. So I'd always make sure I got the, you know, the mini filled first and then the full size filled, just due to, you know, liquidity. But they got their mini liquidity quite, you know, it's pretty high now, as you can see. That's really improved since I last did this trade. But anyway, so you go in there and you put in the spread and you're like, buy this one, sell that one, and buy it like 5 ticks below, sell the other one 5 ticks above, and it would literally just, it would work the orders for you. So the issue was, it's so fast. Again, what it's doing is it's doing a limit order, and then as soon as it gets filled, it does market order on the more liquid pair. And so I'd be working like 2 minis, you know, and do a full market, but I ended up having like, I want to say it was like 1,000 or several thousand to 1 fills, and I didn't know this rule, but there is a ratio on how the ratio on trade as submitted orders to fills on futures. They're not really in favor of the flash trading technology because they don't want it messing with the markets. But so you had to. It's very, very difficult to get that fill. And you have to do this automated. Like you can't, if you try to manually do it, you know, what's going to happen is as soon as you get one filled, you're going to hop over the other one. It's already going to be back together because they snap right back like in a heartbeat. So, and you might get a tick or two out of them, but I mean, you got to cover your bid-ask spread, right? So that's sort of where I was going to begin with. You got to cover that bid-ask spread on both sides. And the bid-ask spread is small, but you still got to cover because you got to get in the trade and you got to get out of the trade. So you are going to have to cover that bid-ask spread on both sides. And but you'll see them. You'll get them, see them off, get off 1, 2, 3 ticks, and you know, in a split second they'll get off 3, 4, 5 ticks. A lot of times you can't even see it on the chart. It's so quick. And you can pull up probably a time and sells maybe and see the historical, but I mean that still flies pretty fast. And see a little bit more when they get off. But it's a, you know, it's a cool trick. But it's one of those things I learned about is they do not appreciate you sending thousands of orders and only having one of them filled on on the CME or any of their, you know, exchanges right there. But you can see right there like 8.15 and then like 8.17, 8.18. There's 3 ticks, so that's a $10. You know, and they got to cover your commission on top of that, right? So let's say $4 or $5 round turn commission. So you got to cover the bid-ask spread, you got to cover the commission, you got to put them all together. And but you know, they start getting off by 3, 4, 5. Then all of a sudden they got like 5 ticks. Well, now you got $10, basically $10, and then you're gonna have 3 commissions because you got 2 mini oils and an oil. You got $15. So you got to make $25. So to even really get anywhere above break even, you're gonna have to net a 3-tick arb on the thing. You have to be able to net 3 ticks of difference. But you'll see them come up because you'll see the last quotes, and I think we saw like at 8.09 there for a second. We were like 8.13. So that's 4 ticks. So we're getting really close. But this thing has to be lightning fast. And again, you know, if you fire off, let's see if they do ratio of orders to fills on CME. And yeah, global messaging efficiency program. So they want the markets to be efficient, but not too efficient. But they go in and I see outright vol scan. So they have all these things on here where they define what you're allowed to do, what you're not allowed to do on efficiency. That might be in the reference guide, but I know one of them is like they'll send you this whole long email, and I mean they'll find you. So if you continue to do it afterwards, not only do they find you, they find the entire FCM for every order placed on that FCM on that market that is not filled at that. So I obviously had to immediately stop because my $50 trade's happening 10 times a day. We're not going to cover, you know, $1,000 overages there. So I was like, okay, well, didn't know. I know now. Thanks for the warning, and it was fun while it lasted. But you got to cover your bid-ask spread, no matter what you're trading, no matter what kind of trade you're doing. And so that's sort of a fun thing. That'll get you looking at things in a whole different way when you realize stuff like that exists. And the reason I bring that up is, let's just go back to that. That's a cool concept. It's a cool idea. It's probably not what most people are going to even be trying to do. But how does this factor into your trading every single day? You need to be factoring in bid-ask spread on your take profits, on your stop losses. Okay? So if I am buying, and let's flip back over just a 10-minute chart. So if I, or let's put it this way, the trade we did today. If I'm selling here and I want to buy back, we'll just say, I think our order was actually what we were looking at. It was a few ticks below here. But if I sell it, 30.95 on the euro dollar, and I want to buy back at 30.62, and I want to get out with the chart, because, you're making your analysis, right, on the chart, 30.62, I need to know what my bid-ask spread is on that trade. Because if I don't know that, I'm actually, when I'm looking at the chart, on most charts, you're looking at the bid price. So you can set them to mark and you can set them to ask, but, if you want to be like the rest of the world, you're basically looking at the bid price. And so let me give you another example. Like, we'll look at USD CAD. This is a common example. It's going to apply to anybody right here. And look at the bid-ask spread on it. We got 30.62 by 30, on the quotes and the orders that are existing right there by, our 20.62.8 by 20.61. So you can have ticks, and we can go into less liquid markets. You can go into all different things and find out what the bid-ask spread is. But you got to account for that bid-ask spread on your exit. So let's just say that the euro dollar had, a 2-tick bid-ask spread on it. Then if I thought that the market was going to be at, get right to this low of 20.62, and I wanted to buy back, okay, then I need to understand if there's a 2-tick bid-ask spread, I'm going to be buying back at 20.64. So even though my target profit on the chart is 20.62, my actual limit order to take profit would be 20.64. And so if you forget about that, you're going to see the chart go down here to 20.62, and you're like, it's at 20.62 on my chart. Why isn't it filling my order? I have an order to buy at 20.62, and you're waiting there, and it's like tick, 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 and then all of a sudden it flies up, and you're like, oh my gosh, I was there, I did, because you weren't accounting for bid-ask spread. And sometimes you even want to give it another tick or two, just in case, because sometimes on that chart what happens, right? They filled like one order at that price, and then it popped back up. And so you want to make sure that you account for the bid-ask spread. You also want to make sure that, in all your trades that you're looking at, volume, everything else, and see what's going on. So there's a lot of different things you can look at, but just account for your bid-ask spread when you're buying back. So if I sell to buy back, and then the same side, now when I'm buying, it makes it a little bit easier, because when I'm getting out, if I'm basing on the chart, the sell and the price right there are going to match. But when I'm selling and buying back, I want to add that bid-ask spread back in to whatever number it is on my chart that I see that I want to get out at. So hopefully that makes some sense to you. We'll be back right after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome on back here to the Diagnostic Trading Hour. So let's bring all that bid-ask spread in, and we were talking about that, and now let's tie it back into Nadex. So in Nadex, when you're taking a profit, when you're setting a profit, you want to look at what the bid-ask spread is. And, you know, some people may go, I've literally heard this comment, well, I mean, that's the price on my chart I want to get out. Well, again, you got to add in the bid-ask spread. And you need to add in the bid-ask spread on the derivative that you're trading. So if you're trading an option, you're going to have to look at the bid-ask spread on that. And, I mean, you know, people want to talk about bid-ask spreads, but it's like, just look at options. They have a wider bid-ask spread on pretty much any option that you decide to trade or look at. And so even if we go over here to, Russell, okay? And we check that out. Or I don't know what to type in TF, but let's just have the same market on RUT. And we'll drop down, and so verticals right here. So you have a $1 wide bid-ask spread, which is 30% of the cost of the trade right there on a vertical. So, which is a defined risk, defined profit trade. So something to think about, that's pretty wide on your bid and your ask. And so when somebody comes to me and they're like, well, I'm trying to trade the Russell and it's 3 ticks. I'm like, seriously? 3 ticks? I mean, that's 30%. So, this isn't 3 ticks. I mean, that's 3 ticks is, on a, let's say you have a $15 risk, So that's 3% of your risk. It's not 3% of your profit potential on the trade. It's not 3% of your cost. So look at all the pieces put together. Right here we have what we got 60 cents. On some of these bid-ask spreads right here. So, just to understand, option bid-ask spread is going to be a little bit wider. But why? So why would you do that? I mean, if you have more bid-ask spread, well, because you have defined risk on the trade. So there's an advantage there. And I mean, it's not the underlying market. So even if we go over, let's check out the futures. And so even when you go to the options over here, so defined risk trade, okay, so $29 per contract, you're going to be doing a lot more than one, but $29 per contract, and you got a 45-cent bid-ask spread on that trade. So, just understand that when you got the defined risk, and you're trading a derivative, the derivative is not going to ever be as liquid. I'm not going to say not ever, but it's not necessarily as liquid as the underlying market, and so it will be a little wider bid-ask spread because that market maker has to make money. They have to have time to get rid of it. So that's part of why they do that. They need to, because it's not like you buy and they sell instantly. Ideally, that's what happens. But sometimes it takes a little oscillation for them to get rid of that trade. So they're buying themselves time. And, you can also see like the quotes, like how, what's the depth of market on that quote, things like that. I can go over here and, put it in here and show me right now. The bid and the ask size is only 15 contracts on the Russell 2000 futures market. So whereas I go over to, Nadex would be, say 50 or 200 or 250, depending on the contract I'm doing. So right now, that's not the quote, that's the bid and the ask size. So they'll fill that many contracts for that price at this second. And so I just like to bring people to reality. They look at it and they're like, well, it says only 50 contracts. That's low volume. It's not volume. That's the size of the quote. It's the best quote size. So if you take all of them, can you get more? Yeah, probably, possibly. You put them in there, will they fill them? Probably, possibly. But what is that at that size, at this second, at that price, that's what you can get filled up. That's the market quote, market price. And anyway, just a little lesson on bid-ask spread today. You can apply that to all different things, options, futures, forex, etc. And I will see you Monday. Hope you have a great weekend. We have another great show coming up for you right after this.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.